In the last couple of weeks, we have gotten some very interesting news about the AI market. Whether it's Donald Trump announcing a $500 billion deal to build out AI infrastructure in the US, or the fact that China is now building more powerful AI models than the US on less powerful GPUs. So today, we are going to discuss all of this and the effects it could have on AMD's earnings over the upcoming year. Thank you guys so much for the continued support. If you're wondering what is the best way you can support the channel, it is simply by going down below and dropping a like on the video, and if you enjoy this type of content, subscribing while you're down there. Thank you guys so much again, and I hope you enjoy the rest of the video. Before we jump into AMD and all of this news, let's take a look at the YouTube portfolio. We're currently sitting at an all-time high of just under $60,000. If we look at the last 3 months, we can see that there was a large move up after the election. This happened across the broader market, and we have certainly capitalized on it. We went from around $53,000 to now sitting just under $60,000. And we've locked in some gains in the new year. We cut our position in Palantir. We had 100 shares. We cut that down to 10 shares currently. So just under $1,000 is our market value. And that position was up around 750% when we sold out. And it's gotten back to that mark over the last week or so. We also own Alibaba, Google, Apple, Microsoft, PayPal, SoFi, Supermicro and Visa. Supermicro is our newest position, up around 1% currently, and then our second newest position is Google, up almost 20%. And if you're a consistent viewer of the channel, you're probably getting tired of me saying this, but I also own 2 dividend ETFs, SCHD and VYM. At some point, I will sell out of SCHD. I don't know when that's going to be, but if we see a dip in the market, then likely I will move this cash into a different position where I think there's more upside. But right now, I have $15,000 in cash, so I'm not very light on my cash position right now. So there's not much incentive for me to sell out of SCHD to build more cash because it'll just sit there waiting for an opportunity. I'd rather have it in SCHD where I'm collecting at least a little bit of dividend income. One thing that I want to focus on this year is actually going heavier into positions when I have strong conviction. And that is something that I haven't done a great job of over the last 3 to 5 years. Oftentimes I've found that positions in my portfolio, I'll have 15 to 20 of them. And I'm trying to bake down my portfolio a little bit more so that it's focused and concentrated into companies that I believe in strongly. And that is something that I'm hoping to work on over the next couple of years, because oftentimes I find that when I do that, I actually end up in better positions overall. When we look at Palantir and SoFi, I didn't go super heavy into them. I only put 100 shares of Palantir onto the table and 200 shares of SoFi. However, if you look at the gains that I made in those positions, 750% and 200%. If I had gone heavier into those positions, I would be in a lot better position overall from this portfolio. But obviously the important thing with that is having very strong conviction and a very good understanding of the companies that you're investing into. So the company that we're going to be talking about today is AMD. AMD in the last 6 months is down 12%. And over the last year, it is down over 30%. From its all-time highs of around $210 per share, the stock has now fallen by over 40%. So this is a stock that is clearly on a dip. And this is something that AMD has gone through numerous times over the last 5 years. We saw it in 2021 and 2022 drop by 60%. However, from that point on, the stock ran up by almost 300%. It had another dip in 2023 where it fell around 25%. Again, running up from that point around 120%. So we have seen this over and over again from AMD. The question is this going to be the same as these previous times where we see a large 100% move after the drop in the stock price? The famous saying goes that past performance is not indicative of future results. However, there are some catalysts around the AI market that could contribute to higher growth for AMD in the future. One of those being this new partnership between Oracle, OpenAI, and SoftBank dubbed Stargate. So this is a very interesting discussion because I don't know if there will be direct impacts to AMD, but I think there will be some residual impacts to the company that will overall benefit AMD. What you have going on here is you have SoftBank, you have Oracle, and you have OpenAI. All 3 of these CEOs are committing to spending money on AI infrastructure over the next 4 to 5 years. And we're talking about anywhere between $100 billion and $500 billion. So these are large investments that are being committed by by these companies. And these investments are already starting to take place. They are starting construction of data centers in Texas amongst these companies. It's important to note that there are many companies actually involved in this. There is ARM, Microsoft, Nvidia, Oracle, OpenAI, and of course SoftBank. When you look at this grouping of companies and you see Nvidia on the list, you may think automatically, how does AMD actually fit into all of this? Because if Nvidia is already part of this program, why would they not just buy all of their chips from Nvidia instead of creating competition between AMD and Nvidia? However, look at two of the other companies on this list. You have Microsoft and Oracle. These are two companies that compete fiercely in AI as well as the cloud space. So that doesn't mean that there isn't room for AMD to actually step in and sell some of their chips to this grouping of companies or even become part of the group. That is a door that I think is open for AMD and will create more competition that could actually benefit Nvidia and AMD and the AI market as a whole in the long term. And I actually think the door is more open for AMD than ever before, especially with this news out of China that a new AI model is outcompeting OpenAI. A little known AI lab out of China has ignited panic throughout Silicon Valley after releasing AI models that can outperform America's best despite being built more cheaply and with less powerful chips. The company is called DeepSeek. They built this AI model in only about 2 months and on less than $6 million using NVIDIA's reduced capacity H800 series chips. And based on some benchmark tests, DeepSeek's model outperformed Meta, OpenAI, and Anthropic's AI models. And they were able to do this by using a process called distillation. This is a process where very large AI models are actually used to train smaller AI models. And this has proved to be very cost effective. And this starts to bring into question all of this spending on data centers, because at the end of the day, if China is able to create a more powerful AI model on less powerful chips, the question has to be had, why are we spending all of this money on very powerful chips when at the end of the day, we could do the same thing with less expensive chips? And that's where I think AMD comes in, because if they are providing chips that are at lower cost than Nvidia, I think companies will have to start asking the question, is it really worth the premium that you're paying for the Nvidia chips, or could they do the same thing with AMD at a lower price point? And this isn't to say that Nvidia is going to be forced to lower their prices. At the end of the day, if they have these very powerful Blackwell chips, what companies could elect to do, instead of exclusively buying these Blackwell chips, they could buy a few of these Blackwell chips, build out large language models, large AI models on them, and then start building out smaller or less powerful chips and having small language models built out on those chips. And those larger language models could actually train these smaller, less advanced language models, and that could create a better dynamic and even more powerful dynamic like we're seeing out of China. Overall, I think this is very good and very healthy for the AI market, because if we're seeing this kind of change of potentially moving to less powerful chips that are more cost effective, overall, I think that is going to make AI more cost effective and open the door for more people to actually use these kind of models and build these models that can have larger impacts on society. Right now, it feels like it's a little bit of an exclusive club where a lot of these big players are the only ones really working in this market right now. So I think that this is going to have a good impact overall, but we're going to have to see how it plays out and how it actually affects companies' earnings. Right now, AMD is scheduled to announce their earnings on February 4th, and analysts have EPS estimates sitting at $1.09 and revenue estimates coming in at $7.53 billion. And as you would expect, the biggest thing to pay attention to in AMD's earnings is going to be their data center revenue and numbers. That is where investors are going to be looking at to see if the company is staying competitive in this market. They did announce last quarter that their Instinct MI325X series chips were going into production in the fourth quarter and then would be rolled out in the first quarter of 2025. So there will be some news around that, that, and that's where investors are going to be interested. They're going to be interested in how competitive is this chip going to be in the broader market. And if they can continue growing their data center revenue by triple digits, that would be absolutely huge in this next quarter. Last quarter, they put up $3.5 billion of data center revenue. That is up from $1.6 billion in the third quarter of 2023. And overall, that was a 122% increase year over year. They've also seen their margins increase year over year. That is something that I think over the next probably 3 to 5 years, we'll see some sort of leveling off between NVIDIA and AMD as they start to compete a little bit more fiercely. And AMD needs to start seeing their margins turn around. In the last few years, they have suffered on their bottom lines. At one point, their trailing 12-month EPS actually went negative. We've seen that turn around here more recently, sitting at $1.12 of trailing 12-month GAAP EPS. However, that's still quite a bit lower than 2021 when they were bringing in $2.57. And obviously, top-line growth is going to be important as well. Right now, they're growing by around 17% year over year. If they're able to get that number over 20%, I think that is going to be a big move in the right direction. The primary driver to that is going to be data center growth. If they are still growing data center revenue by triple digits, that is going to be massive and have a huge impact on their overall top-line numbers. However, in my opinion, the most important thing going into this earnings is going to be the bottom line. I think that the bottom line is where investors are going to primarily be focused. If AMD comes through and they put up numbers around this $1.24, that would be a nice solid beat, and I think that could be a good catalyst for the stock moving into 2025 because they need to have some very consistent and very solid beats to put up the numbers that analysts are expecting in 2025. The average EPS estimate is $5.13. However, the high estimate is $7. I think if AMD can come in around $6 to $7, that would be a very positive thing for the stock throughout the year and could lead to some positive price movement. And the reason this is so important has to do with valuation. Right now, the forward P ratio for AMD is 24.75. This is based off $5.13 of EPS. However, if AMD comes through and they put up $7 of EPS in 2025, that would put their forward P ratio closer to 17, which is significantly lower than what we are seeing here today. And that's really where investor sentiment comes in around this company. It depends on your outlook for where you think AMD is going over the next couple of years. If you believe that AMD is going to come through and put up $7 of EPS in 2025, right now the stock does appear to be undervalued. However, if you think AMD is going to be more in line with analyst expectations, then right now seems to be a fair price for the company. So in my opinion, I want to see AMD go down to around $100 per share for me to buy in. That's just where I personally feel comfortable. Based off their EPS average estimates, that would put the forward P ratio around a 20. I think the AMD is easily a 25 to 30 PE ratio. However, I want a little bit of insurance, and that's why I want the stock to fall down to that $100 mark to really build in that cushion of if I'm wrong, there's limited downside. However, if I'm right, there is a lot of potential upside. But keep in mind, don't buy a company just because a random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. Thank you guys again so much for the support on the channel. If you want to support this video, make sure to drop a like down below. And if you enjoy this type of content, subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do snowmen eat for breakfast? Check the comments down below for the answer. Thanks for watching.